But I want to come back to the fact that markets are so mispriced. And it's not just bonds, it's not just equities, but we're looking at the relationship between fiat currencies and gold and silver as well. I think the fundamental mispricing is obviously in the bond markets.
Yeah.
Because what do bonds do? They reflect forward expectations of changes in the purchasing power of the currencies of that bond. I mean, that's the main thing. There are other factors, obviously. Now, if we're going to get a fall in the purchasing power of currencies as a result of this fracas in the Middle East, then obviously we're going to get higher bond yields. And the consequences of that are very far-reaching. I mean, you've got all the G7 governments basically are running into a brick wall in terms of their finances. They cannot really issue any more debt credibly for the very simple reason that they're now in debt traps. And their debt is not going to be subscribed to by, first of all, foreign investors, and then secondly, domestic investors as well. They're going to look at this and say, no. I think domestic investors will be lent on. They always are. But it's the foreign element which I think is the margin, gives you the marginal pricing. Once you see the 10-year Treasury go above this 5% level, it's currently, 4.6 or something, having backed off from 4.7, 4.75. Once it goes through that, then I think real alarm bells are going to be ringing. And it won't just be bonds at that stage. The valuation disparity, which you were referring to off camera between equities and bonds, is at the highest level probably in history. And I think we can probably demonstrate this with a chart.
Yes.
The point about that is that if you get another lurch higher in bond yields, the equity market is toast. And not only is the US equity market toast, but it's floating in a sea of credit, which between hedge funds and broker loans, you're looking at around about $9 trillion. So we can see foreigners getting out of that market as well. And how much have they got? Nearly 25 trillion invested in US equities. So you're going to get foreigners liquidating, you're going to get the banks liquidating their collateral against those loans in a falling market. I mean, this could be extremely unpleasant. And following on from that, what do the central banks do? Well, I mean, they have to do what they can to stop the private sector sliding into a slump and markets, if you like, reflecting that. So they are going to expand the amount of credit, which basically means printing currency, printing bank reserves by issuing short-term debt, actually. I mean, because nobody's going to buy the long-term stuff. So they will suppress interest rates in order to just do that. And what happens then? Well, the currencies go down. And we're looking really, I think, and I've been maintaining this for some time, Johnny, we're looking actually at the end of this current fiat currency era. Yeah. Fiat currency eras always end as a result of excessive government obligations. Yes, I mean, what we've seen, Johnny, is we've seen all the sort of the froth, if you like, just taken out of the market. And everything that I've been seeing in the last few weeks tells me that the market is just so oversold. I don't think there's any speculative froth in there. I wouldn't mind betting that along with the swap, say, on COMEX and so on, there are shorts out there who are being squeezed the morning this is being recorded, which is the 5th. And silver is up 4%. I mean, it smells, if you like an initial short squeeze. Yeah. But I want to come back to the fact that markets are so mispriced. And it's not just bonds, it's not just equities, but we're looking at the relationship between fiat currencies and gold and silver as well. And I think your comment about the debasement trade is absolutely spot on. The other thing that people don't understand is that gold and to a lesser extent silver, but still technically silver, are real money without counterparty risk. Yeah. They only really come into their own when there is risk in credit. Currencies are credit, and that risk is demonstrably increasing. And I think anyone who finds that hard to understand should actually just sort of think about what the hell is really going on in the world. what is happening to all this debt? What is going to be the consequence of higher bond yields? What's that going to do to the risk of owning any form of credit? If you can understand that, then you'll understand why get the hell out of credit and get into real money, which is only gold without counterparty risk. So this is the debasement trade, which I think, again, as you describe it, I think is going to come back for much of the future. I think in terms of, whether gold goes to 6,000, 8,000, I don't particularly care. It's not gold going up. It's currencies going down. This is the point which, of course, nobody really understands because they all account in their currencies. They've been thinking that gold is a risk. Actually, my risk-free position is just to hold dollars cash, for example. Well, yeah, the accountant would agree with you, but it doesn't take account of the depreciation in the value of that risk-free asset. But gold does. Yeah. Gold's purchasing power is relatively constant over long periods of time. You can go and look at Diocletian's Edict of Maximum Prices, and you will find things in there which are similarly priced today. Slave markets have gone, thank goodness, so you can't compare them. But there are other actually quite serious day-to-day things which you look at the prices and they are not too dissimilar to those of similar quality today. And this is terribly important to understand because nowhere is this more true than in the relationship between gold and commodities. Yeah. So what we are seeing is the beginning of a decent commodity bull market measured in declining fiat. But really, this is all an escape from fiat currencies. Yeah. And the idea that an individual commodity is driven by supply and demand factors is undoubtedly true. But if you look at a basket of commodities, that basket's value reflects, if you like, the other side of the value of the currency in which you're pricing it. Yeah. So these are going to be very interesting times. The dollar debasement trade is going to give you quite a few exit points, I think, out of dollars, euros, yen, whatever the currency is. But the principal one and the accepted one is gold, which is why central banks are selling fiat to buy gold. They're not buying gold so much as they're selling fiat. Yeah, and not only that, we won't go into the whole history. This will take us a couple of hours of great fun, I had to admit. But suffice to say that China's moves to be able to put its yuan onto a gold standard have been accelerating, particularly from April the 2nd last year when Trump held up his board with all the tariffs and all the rest of it. You see everything that they were doing was to protect their currency. Now, they're not going to suddenly, say, right, this is the rate we're going to go on the gold standard and, to hell with the rest of the world, because they don't want to be blamed for collapsing the rest of the world. That blame, as far as they're concerned, and certainly as far as I'm concerned, is right in the court of the Americans. I think what the Chinese will do is they will wait until it is absolutely obvious that our problems are down to our follies, if you like, in the G7, America's in particular, because that happens to be the one which we see now. But, we're all committers of the same sin. And once that is obvious, then I think China will protect herself to put her yuan onto a gold standard. Yeah. Originally, I thought this would be just for trade settlement purposes through her SIP system. But I'm more inclining to the view that it's going to be wider than that. And I think it will also encompass the domestic yuan. And I think that exchange controls will probably be removed at that stage. The reason that I think this is because the People's Bank no longer requires for you to seek its permission if you want to export gold from China to Hong Kong. In other words, the gates have been opened. That, I think, is a major, major, major move, and it just does indicate what China's real thinking is.